Value investing is easily one of the most popular ways to find great stocks in any market environment. After all, who wouldn't want to find stocks that are either flying under the radar and are compelling buys, or offer up tantalizing discounts when compared to fair value? One way to find these companies is by looking at several key metrics and financial ratios, many of which are crucial in the value stock selection process. Let's Manulife Financial Corp MFC stock into this equation and find out if it is a good choice for value-oriented investors right now, or if investors subscribing to this methodology should look elsewhere for top picks. P/E ratio. A key metric that value investors always look at is the price-to-earnings ratio, or P/E for short. This shows us how much investors are willing to pay for each dollar of earnings in a given stock, and is easily one of the most popular financial ratios in the world. The best use of the P/E ratio is to compare the stock's current P/E ratio with A, where this ratio has been in the past, B, how it compares to the average for the industry sector, and C, how it compares to the market as a whole. On this front, Manulife Financial Corp has a trailing 12 months P/E ratio of 8.41. This level actually compares favorably with the market at large, as the P/E for the S&P 500 stands at about 27.91. If we focus on the long-term P/E trend, Manulife Financial Corp's P/E level puts it below its midpoint over the past 5 years. Moreover, the current level is fairly below the highs for this stock, suggesting it might be a good entry point. However, the stock's P/E also compares favorably with the Zacks finance sector's trailing 12 months P/E ratio, which stands at 18.81. At the very least, this indicates that the stock is slightly overvalued right now, compared to its peers. We should also point out that Manulife Financial Corp has a forward P/E ratio of just 7.76. So it is fair to say that a slightly more value-oriented path may be ahead for Manulife Financial Corp stock in the near term too. P/S ratio. Another key metric to note is the price-sales ratio. This approach compares a given stock's price to its total sales, where a lower reading is generally considered better. Some people like this metric more than other value-focused ones because it looks at sales, something that is far harder to manipulate with accounting tricks than earnings. Right now, Manulife Financial Corp has a P/S ratio of about 0.89. This is substantially lower than the S&P 500 average, which comes in at 5.22 right now. Also, as we can see in the chart below, this is somewhat below the highs for this stock in particular over the past few years. Broad value outlook. In aggregate, Manulife Financial Corp currently has a value score of B, putting it into the top 40% of all stocks we cover from this look. This makes Manulife Financial Corp a solid choice for value investors, and some of its other key metrics make this pretty clear too. What about the stock overall? Though Manulife Financial Corp might be a good choice for value investors, there are plenty of other factors to consider before investing in this name. In particular, it is worth noting that the company has a growth score of C and momentum score of F. Meanwhile, the company's recent earnings estimates have been encouraging. The current year estimate witnessed 4 upward revisions in the past 60 days compared to no downward revision, while the full year 2022 estimate also witnessed 4 upward revisions compared to no downward revision in the same time period. This has had a noticeable impact on the consensus estimate, as the current year consensus estimate improved 4.1% in the past 2 months, whereas the full year 2022 estimate improved 4.1% in the past 2 months. Notably, the stock with favorable estimate trends has a Zacks ranked number 2, which is why we are looking for outperformance from the company in the near term. Bottom line, Manulife Financial Corp is an inspired choice for value investors, as it is hard to beat its incredible lineup of statistics on this front. Furthermore, the company carries a Zacks ranked number 2, which indicates that the broader factors are favorable for the company. So, value investors might want to delve deeper in this stock as it appears to be a compelling pick.